Hey guys, this is Dave with Moniology. Hope everyone is having a great weekend. This is the weekend market review for February 17th and 18th, 2018. Let's have a look at what's taking place in the markets from multiple time frames, starting with the 10-year US Treasury. So this is a daily chart here, and while everyone's talking about how yields are breaking out, and sure enough, this is what we were talking about here and here. Now we're thinking that yield's probably going to pull back some here to the middle Bollinger Band at the minimum, possibly as low as 2.5, 2.6 here before they ultimately do break higher. But notice here on the MACDs, they're starting to break below zero, so we're gonna be in the midst of a little bit of a pullback here, and people are gonna start questioning why yields are actually pulling back. But on a weekly, they still are very overbought and in prime territory to move higher. But I think that they're just going to consolidate here for a little while. Probably above the 2.7 level will make sense. Maybe we push back towards this middle Bollinger Band level at 2.5. So, like I said, pullback likely. So there might be some short-term opportunities in buying bonds and fixed income instruments. Now on a monthly level, here's where we are. We had this bullish flag. Well, we had this breakout from this wedge, created a bullish flag here, and then we broke out here. But we broke out, and on the daily and weekly time frame, we were showing a little bit of divergence, negative divergence. So like I said, likely pull back some, but this is just the beginning of very, very important long-term move. You draw a trend line here, basically, all the way from 2008, and we broke out of this downtrend. You draw a trend line from 1983, which is not shown here, and we broke out of that downtrend already. So bottom line is, if we break out above 3, this is going to make a transformational shift in the way we look at markets. So definitely want to be aware of what's taking place. Now looking at gold on the daily chart, gold had a fantastic rally here from that 1320. This pullback did not surprise us one bit, because we showed here some divergence here on the daily chart. Now honestly, I can't find it right here. Right here we have multiple highs on the daily, so I don't see any divergence here. But when you look at the weekly, I think that's where we'll see it. It showed us that we were likely to pull back some, and we did. Knocked off a number of these speculative long positions, and now we're starting to rally. We're now above the 60 on the RSI, which is an important level to hold. We're consolidating here, and it looks like we're getting ready to break that 1365 level once and for all. MACDs are above zero. Money flow is positive. Stay tuned in gold. This is a sector that is going to really, really skyrocket. Here's what I was talking about here. Last time we hit 1365, RSI was just around that 61 level. The time before that we hit 1362, RSI was close to 70. So that's this negative divergence. But we pulled back, we found support around the 1300 level, and now we're starting to take off. And this looks like this move is legit. We will see 1400, my prediction, by April, if not earlier. So here's a once in a lifetime opportunity to go long the sector, and you're gonna be rewarded for doing so. And here's gold on a monthly basis. We were in this secular bull market here. We had a cyclical pullback, and now we're starting to really break out of this 5-year downtrend. It's being led by momentum, and that's what you want to see. And once we break above the 60 level on RSI, that's likely going to coincide with this 1400 level, and then we move, we really fly higher thereafter. Taking a look at the high yield junk bonds. So we broke down, no surprise, after showing negative divergence here, and now we made a rally. The question is, what happens here? We're back at the middle Bollinger Band, and we're right at that 50 RSI level, which is basically coincides with where we've had a lot of resistance, and really the major breakdown happened right around here on RSI. So now we're back at that point. Do we continue going higher? It's a possibility. If we break above zero on the MACDs, but I think that we might just roll back over. So stay tuned there. On the weekly chart, here again we're retesting that 50 area. So if we break above it, we might just rally to new highs. If we can't break and maintain that 50 level, then we may just very well continue to roll over. So let's keep a close eye on this one. On the monthly chart, well, so far so good. I mean, we're trying to break below this 69.70 level on RSI, but we've got this hammer pattern on the monthly chart, found support on the middle Bollinger Band. So maybe we just circle back higher and look to new highs. So we'll see. This is an interesting development. Crude oil, we pulled back after some divergence as we expected, and we found support at 58, which is no surprise. There's a lot of support here. Now we tried to rally. We broke above the 50-day moving average. Again, no surprise that you break above a moving average, where a lot of amateurs are there with stops. Now we're at a point right below the 50 RSI where you're going to see a lot of resistance. So if it breaks it, we move higher. If it doesn't break it, we move towards that next target around that 55 level. So my hunch is that we're going to move lower, but I'm open, keeping my mind open to the various possibilities. Here again on the weekly, we broke below that 60 level. Now we trying to test it from the upside. Let's see what happens. But we have found support on the 200 EMA at around 58. Coincides with the middle Bollinger Band at level of 58. So no surprise that we found some support. But look at the MACDs; they're rolling below zero, and I think that this move here is not going to be sustained, and it's going to roll over for a couple of week correction. Crude oil monthly, inverse head and shoulders is something we've called for a long time. We think we will eventually go higher, but this is going to be a good opportunity to create this cup and handle kind of bullish flag pattern all the way back to possibly 50 level before moving higher, so stay tuned. Nasdaq Daily, Nasdaq is bounced back after this pullback, but this is the level that we expected us to retest, and we're right about here. We had a bad close on Friday, so let's see what happens if this level cannot be broken through to the upside, because this is frankly where the major fall happened, right over here, and that's where we can draw the RSI resistance. If that cannot hold, if this PPO MACD level can't break higher, then we likely turn back over. Nasdaq weekly, we tested the 50 on the weekly RSI successfully. Now we bounced towards the 60. There's going to be a lot of resistance here, and so this is going to be an interesting level to see how next week plays out. Nasdaq monthly still extremely overbought, but looks like it wants to move potentially higher, so we'll see what happens there. Russell 2000 daily, we've had a nice snapback rally, but we're at that level where you would expect to find resistance. Let's see what happens in the next couple days. Russell weekly broke below 50, found support at the same level. It's found support previous levels, and now it's making a little run. We had a very nice week, 4.5% move, but we'll see. I mean, maybe there's a little bit more upside before we hit the 60 level, but there's going to be a lot of resistance up here. And the Russell monthly still very much overbought and still very much in very positive territory. So long as it's above, I would say, the middle Bollinger Band, which is around that 1396 level, you have to assume the market's going to be moving higher. But I do see the MACDs starting to roll over. So my hunch is that longer term, we are in the early stages of a multi-month, I don't want to say bear market, but certainly corrective territory. S&P, same thing, bounce back, resistance around the 50 RSI level, middle Bollinger Band serves as resistance, so we'll see what happens. On the weekly, beautiful bounce once off of 50 level RSI support. Can we break through 60? We'll see. And a couple more charts here. The monthly, nothing really to see, exceptionally overbought levels. I mean, this can pull back to 21, basically 2200, and still be in a very much a bull market. So in fact, I expect us to get here at some point this year. We'll see how that happens. The dollar looks like it's ready to rally a little bit. It's got some positive divergence here, where we had a double bottom in price, but momentum did not follow suit, and now it's building this stair-step base. So I wouldn't be surprised at all to see the dollar bounce back to the 92 level, just as everyone expects it to tank. The very same people that expected the dollar to go to 120 are now expecting it to go to 80. So you got to be very wary of the experts. Now here's this weekly chart. For the dollar bulls to recapture the bullish trend, it must break this 92 level. If it does not, it's likely going lower, which is our hunch, but it's gonna attempt to break it. So we'll see what happens in the next couple weeks. The dollar monthly, its momentum is still leading price lower, and when momentum leads, when you don't see any divergence, you think, my hunch is that we move lower towards that 80 level before finding any significant support. Now the volatility, this is the index that's very, very important. You look at the volatility, we broke out, now we pulled back, broke below the middle Bollinger Band. Now we're finding support around that 1750 area, which is kind of support from the previous high, and it's also coincides with that 50 RSI level. If this can hold, it likely starts breaking out higher once again. So it should be interesting to see how volatility plays out. And again, this bullish flag breakout is what caused a lot of this short covering, and so in volatility and a lot of the selling in the markets. And now we pulled back some, but so long as we're above this 14.5 to 15 level, we're still in this breakout territory. And I expect this level around 60 to hold. If not 60, then certainly 50 in volatility. And on the monthly level, this is the one that's so crucial. If we close the month of February like we are right now, and above this 14 to 15 level, then I think that we have entered a new stage in the market cycle where we're going to experience a lot of volatility. Finally, the world markets. I mean, they really fell hard, and they fell below the middle Bollinger Band, but they've recaptured that so far. But the MACDs are well below zero. So I think ultimately we're going to head lower, possibly to as low as 1800 on the MSWORLD index. And this is, by the way, the weekly chart here. And on the monthly chart, while we're still very much in overbought territory, the world markets seem to be leading the global markets down. And that is not what you want to see, because these are the markets that led the last rally since 2016. They look like they're leading the markets down. Anyway, guys, thank you very much for watching. Look forward to your feedback and your support. For those of you who are new to our videos, we are a user-supported site. We don't charge for our videos at this point in time, and we would like to keep it that way. The way you allow us to do this is by supporting our work here on Patreon. With your monthly donations, it allows us to create better quality videos more often and provide very, very basically educational videos for you. So far, we've got 6 patrons, so thank you so much for those of you who are giving. Please, if you have the ability to do so, please consider giving to our campaign, patreon.com/Moniology. Thank you very much, and have a great week.